Does it make sense for a protocol to secure $26 billion in assets, generate $75 million in annual revenue, and yet have a market cap of under $500 million? If you look at Lido Finance right now, the math is completely broken. We are looking at a valuation gap that frankly shouldn't exist in an efficient market. You have the biggest staking provider on the planet, trading like a forgotten ghost chain. But here's the contrarian insight that keeps me up at night. The market isn't wrong. The token model was broken. Until now. There is a massive shift happening behind the scenes, a proposal called Goose 3 that could finally flip the switch on value capture for Lido holders. If this passes, that gap between value locked and token price is going to close, and it is going to close violently. I'm looking at a specific setup on the 2-week chart that suggests the bottom is in. $84,000 on Bitcoin was the line in the sand. But for Lido, the line is right here at 50 cents. Let me show you why I'm buying this fear. Right now, Lido is trading between 50 and 60 cents. If you have been holding this bag through 2024 and 2025, I know you are tired. The sentiment is in the gutter. You look at the charts, and it feels like a slow bleed to zero. People are screaming that governance tokens are dead, that they have no utility, and frankly, for the last 3 years, they were right. But that's exactly why we are paying attention today. When the crowd is disgusted, the smart money starts doing the homework. We are seeing a cooling phase in the sentiment metrics, just like we saw with Chainlink before its run. Most people have stopped paying attention because the price action has been boring, practically chopping sideways at the lows. But if you look deeper, there is a whale entity that has been moving in and out of this zone, accumulating while retail investors capitulate. We are sitting on critical support levels from June 2022. This is the moment where the risk-to-reward ratio flips in our favor, provided you understand what is about to change in the fundamentals. Let's talk about why this token has been lagging. It is the elephant in the room. Lido is a giant. Look at the data from Chain Broker. Lido is generating over $14 million in weekly fees. It is dwarfing nearly every other application in the space. It has $26 billion in total value locked. Yet the token has just been a governance token. It had no claim on that revenue. That's why the market cap is stuck below 500 million. The ratio of market cap to TVL is 0.02. That is absurdly low. However, the narrative is shifting. We have the Goose 3 proposal live on the governance forum. This is the catalyst we have been waiting for. They are discussing an automated buyback mechanism. The proposal suggests using protocol revenue to buy back Lido from the open market, potentially targeting $4 million a year, capped at $10 million, specifically when Ethereum is above $3,000. Think about the mechanics here. For the first time, there is a direct link between the protocol's success and the token's price. They are looking to transform Lido token from a useless governance vote into a value-accruing asset. On top of that, development activity is exploding. It's up 690%. While the price is down, the builders are shipping faster than ever. When you combine a revenue-generating machine with a potential buyback engine, you create a powder keg for price appreciation. This isn't just hopium. It is a fundamental restructuring of the tokenomics. Now, let's get into the charts, because the fundamentals mean nothing if your entry is garbage. I'm looking at the Lido USD pair on the 2-week time frame. This is a macro view because I want to filter out the short-term noise. The first thing you'll notice is this massive descending channel, marked by those yellow dotted lines. This structure has been containing price action all the way through 2023 and 2024. It has been a brutal downtrend, lower highs and lower lows. But look where we are right now. We are heading to test the very bottom support of this channel, right around the 40 to 50 cent range. This aligns perfectly with the historical lows from June 2022. When price revisits a level that held firm during the worst of the bear market, you have to pay attention. I want you to look at the Heikin-Ashi RSI indicator at the bottom of the screen. It is deeply oversold and slightly starting to curve. Every time we have seen this setup in the past 3 years, it was followed by a significant relief rally at the very least. However, we have hurdles. The price is currently below the 10, 21, and 55 exponential moving averages. Those blue and purple lines are acting as dynamic resistance. We need to reclaim them to confirm a trend reversal. But as a position trader, I'm not waiting for the breakout to start building a position. I'm buying the support. Let's talk about Fibonacci levels. Anchoring from the December 2024 high of $2.49 down to the recent crash low of 27 cents, our first major resistance is the 236 level at 80 cents. Above that, we have the 382 at $1.10. That 110 level is critical because it also coincides with the top of the descending channel. If we break 110, this entire bearish structure is invalidated. Also, look at the volume profile on the left. The point of control, the price where the most volume has been traded, is way up at $2.35. That acts as a magnet. If we can get some momentum, price tends to travel quickly through low-volume nodes to revisit that value area. So what am I doing with this data? I'm not telling you what to do, but here is my exact playbook. I'm treating the zone between 60 cents and 35 cents as my accumulation box. I have already started a light dollar cost average around 55 cents. If we get another flush down to the bottom of the channel support at 35 or 40 cents, I'm going in heavier. This is the load zone, marked in green. I want to buy when the market is bored, not when it is euphoric. Now, risk management is non-negotiable. My stop loss is a hard line in the sand. I need to see a weekly candle close below this channel structure. If we start closing weeks below 35 cents, my thesis is broken. It would mean the market doesn't care about the buybacks or the revenue, and I'll cut the loss. I would look to re-enter much lower, maybe around 25 cents, but I won't hold a losing bag forever. For take profits, I'm not trying to time the absolute top. I'm scaling out into strength. My first target is $1.10. That is the channel resistance. I'll trim about 20% of my position there to lock in profits and move my stop loss to my entry price. This makes the rest of the trade a risk-free ride. My second target is $1.60. Third target is $2.50, which brings us back to that volume point of control. And if we get a full-blown alt season and the buyback narrative really catches fire, I leave a moon bag, about 10% of my position, for $3.80 and potentially $6. Here's the strategic outlook. We are playing a probability game. The risk-to-reward ratio here is roughly 1 to 10 if we hit the upper targets. The downside is limited because we are practically at the floor of the chart history. The upside, however, is open-ended because of the valuation gap. The worst-case scenario is that the Goose 3 proposal fails, Ethereum drops below $2,000, and Lido breaks channel support. In that case, we stop out with a manageable loss. The best-case scenario is that the proposal passes, creating a deflationary pressure on the token while Ethereum rallies. In that environment, a 50-cent Lido is going to look like a gift. I'm betting on the latter because the incentives for the DAO are finally aligning with the holders. They know they need to fix the token value capture to stay competitive against EigenLayer and EtherFi. They are backed into a corner, and that is usually when the best innovations happen. To wrap this up, Lido is a classic example of a market dislocation. You have massive fundamentals and revenue disconnected from price due to poor tokenomics. But with the buyback proposal on the table and price sitting at multi-year macro support, the asymmetry is too good to ignore. I'm placing my bets here, managing my risk, and letting the chart do the work. If you want to track this trade with me in real time, or if you want to see exactly when I trigger my buy orders, come join the free Telegram group. The link is in the pinned comment below. I'm giving you macro and micro market updates every single day. And if you are looking for another infrastructure play that is showing similar undervalued metrics, check out this breakdown I did on the screen right now. Thanks for watching, never financial advice, and I'll see you over there.